The macro environment has Bitcoin in a chokehold. But is this the start of Bitcoin's next bear market, or just the final huge shakeout before a massive leg higher? Well, in this video, I'm breaking down the current price action and key market structure, highlighting major support levels and downside risk, and sharing the most compelling on-chain signal worth watching right now. Let's dive in. Let's start by looking at the general price action and overall market structure. Right now, the structure confirms heavy downside momentum. We're seeing strong bearish price action across the board, with the macro environment firmly in control. So, what's the short-term outlook? Well, it's still decisively bearish, with extreme fear rampant and volatility back with a vengeance. But the long-term picture remains unchanged. Nothing has fundamentally shifted with Bitcoin. If anything, this negative price action is making the long-term risk-reward more attractive than ever. Try not to lose perspective. We've seen the low 70,000s tested again and again over the past month, and each time, the bulls have held their ground. It's arguably the most important level to stay above right now, and holds a psychological significance as the previous bull run all-time high. A clean break below this level could see price cascade quickly down into the mid-50s. When markets are this fragile, keeping a bit of dry powder on the side is never a bad call. I always keep a small percentage in cash, just in case things don't play out the way I hope or expect. It gives you flexibility, and that's a luxury when fear is in the air. Meanwhile, global liquidity continues to trend upward, as illustrated by the green line representing the 10-week lag on global M2. Following the most recent sell-off, calls for emergency rate cuts and the potential return of quantitative easing have intensified. Historically, when liquidity of this scale is injected into the system, it typically takes around 2 months for its full effects to materialize. And when it comes to liquidity, remember that it's a rising tide that lifts all boats, with Bitcoin being the most buoyant of them all. Let's now zoom in on the 200-day moving average, one of the most widely used bull-bear thresholds in investing. Our heat map shows different colors to highlight how extended we are from that line. The light green dots we're seeing right now represent some of the best risk-reward opportunities available in a bull market. But if we're slipping into a bear market, the 200-day often flips and becomes a major resistance. So, how you treat this line really depends on which camp you fall into. If you're finding these on-chain insights valuable and want to stay ahead of the game, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. Now let's dive back into the analysis. Now looking at our on-chain accumulation signal. This prints a gradient of green when the price dips well below key short-term holder metrics. The lighter the green, the stronger the signal. It's also designed to filter out false positives when bullish structure breaks down. While no tool is perfect, this one's a solid guide for when to consider buying the dip, especially when short-term holders are in maximum pain. These moments often feel the worst, but they've historically been some of the best times to stack. If you're a buyer, and you're not retiring in the next few years, this is just another quality accumulation zone. Sure, price could fall further, and calling exact bottoms is a fool's errand. But this is one of those times when the odds quietly stack in your favor. Finally, let's turn to our Z-score probability waves. Right now, they're marking $71,000 as the -3 standard deviation level, which is an extremely rare downside deviation. When it comes to volatility, nothing is off the table with Bitcoin. But historically, moves this extreme tend to snap back with strong mean reversion. That said, we must stay grounded. If a true bear market is forming, this could be just the first of many negative sigma events. If you're medium-term bearish, a mean reversion bounce could even present a strategic exit before potential lower lows. Here's how I approach it. No one can predict the future of markets. Our on-chain data doesn't forecast the future either, but it does show us what's happening right now, especially when it comes to investor sentiment and behavior. That's an incredibly valuable edge. Sometimes we can say with high confidence that something is likely, but certainty doesn't exist in this game. The best approach, in my view, is to have a clear plan for both the downside and the upside. That way, whatever happens, you've already mentally rehearsed it. You're not caught off guard. Just make sure you don't get carried away when things move fast. And that's the hard part, but it's what separates long-term winners from everyone else. So, to wrap things up, despite all the short-term fear and bearish momentum we're seeing right now, nothing has changed in the bigger picture. Bitcoin's fundamentals remain solid, and from a long-term perspective, these Black Monday type crashes can actually be a gift. The worse things feel in the moment, the better the risk reward they tend to become, providing you can keep your cool. That $70,000 zone is still the line in the sand. It's been tested multiple times, and so far the bulls have defended it well. But if it gives way, don't be surprised to see a quick move down into the mid-50s. That's why having some dry powder ready and a plan in place is so important when the market gets fragile like this. And finally, it's on-chain data that we should be paying the most attention to at this stage. My accumulation indicator is lighting up with increasing strength, signaling that short-term holders are extremely underwater right now. This has always been a great time to step in and add a little more to your stack. At the same time, the Z-score deviation has plunged deep into extreme negative territory, a level that historically has marked periods of undervaluation and prime accumulation zones. These are the kinds of setups that tend to reward those with patience and a long-term perspective, not the ones who react emotionally and sell into weakness just as conditions begin to shift in their favor. And that's all for today's analysis. Want more in-depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.